Hello, and we are live. Krishnan, can you hear me?
Hello, Joe. Yeah, good morning. I can hear you definitely.
Um, we'll give everyone 30 seconds or a minute to join. But for those of you that are here, if you wouldn't mind saying a quick hello, leaving a comment in the chat so that we know that we're not speaking out into the ether. Um, Today, I am joined by Krishnan Kumar, who is an R&D specialist. He's the CEO and founder of Research QX. And prior to starting Research QX, he worked at Deloitte for 15 years in R&D. And this is, I'm sure he'll say, this was around the time that R&D actually started. And he was actually one of the founding members of the team at Deloitte. So he really is an expert. He knows his stuff, and which is why we've got him here today. Hey, Ben. Hello, Mr. Mongolia. Are you based in Mongolia, Mr. Mongolia? In Ulaanbaatar? Or do you just like Mongolia? But yeah, hopefully that was a good introduction, Krishnan. Did I miss anything?
No, Joe, thank you for that kind introduction. No, that's very much what I bring to this discussion. So I'll just make a couple of very minor corrections. I worked at Deloitte for 13 years, not 15, and it's still good enough. And and I can't claim to be a founding member of the team because the team had existed for a few months before I joined. So, but it's as good as a founding member in terms of the work content and how it progressed over the next few years. So, apart from those two, quite a lot of experience in this industry sector, particularly 20 years completed. In fact, this week, by the end of this week, I would have completed 20 years specializing in R&D tax credits, and that includes, a lot of client experience, a lot of real life practical experiences of how to get successful claims in. Worked with potentially maybe 700 to 800 different client organizations over the last 20 years. So quite a lot of practical experience.
Yeah, absolutely tons. Um, and Mr. Mongolia has confirmed it's actually Rez. So hi, Rez. Good to speak with you again. Um, I suppose as well for the benefit of anyone listening or watching, e-commerce accountants as a firm, we have previously historically done R&D claims for our clients, and R&D is a huge tax break for businesses. However, once I met Krishnan, I sort of decided that rather than us handling it ourselves, it really is worth going to a specialist. So we do now refer our clients over to him and his team. So I guess Krishnan, if you wouldn't mind, you've got some slides that we're going to look at initially, and then there's going to be a live Q&A. If you wouldn't mind, if that's okay to start with your slides, and we can sort of jump right in.
Yeah, so I'll quickly introduce myself a little bit more than what you have said, Joe. That's the essence of my experience, but a little bit around that. So I come from a software development and architecture background initially for the first part of my career, about first 6 to 7 years of my career, I was a software developer working on product development. So quite a strong technical experience of building products and shipping products. And then I brought that experience into the world of R&D tax credits. So one thing about R&D tax credits is that you have to justify the technical eligibility of projects, and that requires an understanding of technology as well as the understanding of R&D rules. That gives you the best chance of capturing everything from the R&D perspective and making a strong case to HMRC about why your project meets the criteria. So I just wanted to highlight that, and then obviously, as I mentioned, I worked at the Deloitte R&D tax team, joined the team at a very early stage, built the client base, built the practice, went through a whole series of iterations of the R&D scheme over the 13 years that I worked there, and then after that, I started Research QX about 6 years ago. Now, the idea at Research QX is we very much enjoy working with, the small and mid-sized companies. they while working at Deloitte, I had the good fortune to work with some very large companies in the country, but I also really enjoy working with the smaller companies because I feel that the R&D scheme can make a lot of difference to people when you get the money back from the government. So, happy to advise people, help with R&D tax credits, as well as there are a number of other schemes which provide grants and incentives for technology work. So, although today's session is focused on R&D tax credits, there are other opportunities for companies to claim for other areas as well, and it's a whole ecosystem where technology work gets rewarded. So I can touch upon a little bit on those ones as well, and then maybe in the future we can organize some sessions dedicated to that. So yeah, so let's jump into the slides, and then we can run through the details.
And for anybody watching, if you have any questions as we go, we are monitoring the comments, so feel free to put them there. And as long as it doesn't interrupt the flow, we'll jump in and look at the comments as and when we go.
Yeah.
Thanks, Krishna.
Perfect. So, as I mentioned, we will focus on the R&D tax credit scheme for today's session. This is one of the schemes that incentivizes technology work. There are other grants and other rewards for having patents, etc. We'll not go into too much detail on those, but they exist as well. Now, a little bit history about the R&D tax credit scheme. So, this scheme was introduced about 25 years ago in the UK. It was modeled on similar schemes running in Canada and US and some of the other countries, Australia. And then gradually, a lot of European countries have also implemented R&D tax credit scheme. Essentially, if you leave all the detail aside, what this comes to is that if you are spending money on any technology activity, whether you're building products, building new solutions, enhancing existing products, enhancing your existing technology, and if it meets certain criteria defined by the R&D legislation, you get a part of the project funded by the government through the tax system. So what is the most important thing here is that the quality of work should meet the technical criteria that have been specified by the government in terms of qualifying R&D tax projects. There are, in the UK currently there are around 40 to 50,000 companies that claim this benefit, so it's quite well established. There have been some challenges recently in the last 3 to 4 years with some bad practices coming into the industry. Some people making claims which were not justified. But overall, the scheme, the intent and purpose behind the scheme remains very good. It rewards innovation, it rewards technology work, and if you're doing technology work, I would definitely encourage you to look at this. And in fact, the government also encourages you to claim R&D tax credits. So let's move to the next slide, and we can go into some more details.
Yeah.
Perfect. So this slide tells you a little bit more about what the incentive is. So it's a government incentive. The government has a policy objective to increase the R&D spend in the country. And the way it works currently is that if you spend certain amount of money, by default, if your project qualifies, then you get 15% of that project funded through the scheme. That 15% so basically means that if you are spending £100,000 on a technology initiative, you can get £15,000 from the government. This 15%, normally there are two mechanisms by which you can get this money. So if you are profitable and you have a tax to pay, then the 15% amount comes off your tax bill. So suppose you have spent £100,000 and your benefit is going to be £15,000. Whatever your tax bill is, you can simply subtract £15,000 from your tax bill. If you are not profitable, if you don't have any tax to pay, then the credit is paid by the government as a cash incentive to you. So you get the money transferred physically into your bank account. So either way, whether you are profitable or not profitable, you get 15%. There are some nuances around that. There are some restrictions in a loss scenario. We won't complicate today's session by going into too much detail on those, but by and large, you can get the 15%, regardless of whether you're profitable or in a loss position. The scheme itself is open to companies in all sectors. So if you are I know most of this group is in e-commerce business, so that's a very good area to be in terms of technology work. But it is open to all sectors. It's open to automotive companies, it's open to finance, software, life sciences companies, manufacturing. So the scheme itself doesn't differentiate between industry sectors as such. The key thing is that if you're doing technology work and if you're building some technology, then that is what the scheme rewards. So many times people have this misconception that, okay, you need to be a research lab, or you need to be an academic institution or university or something which is very high end blue sky research kind of work to claim this incentive. But that is not the case. This is very much open to all companies that operate in the UK. Now, if
Krish,
you,
sorry
yes.
to break your flow, Krishnan. We've had a quick question. So Patrick has asked, he said, to get this, do you need to have a UK patent? So does this apply only to businesses that have patents, or is it applicable to anyone?
Good question, Patrick. So there is no requirement for you to have a patent for this particular incentive. There's no need for you to have a patent. There are other schemes which reward patents. So if you have a patent, then there is another scheme called Patent Box, which basically reduces your corporation tax payable for any income that you can link to the patent. But we can cover that in a separate session. For the R&D tax credit, there is absolutely no requirement for you to have the patent and even the IP associated with it. So you can share the IP with someone else. You can actually sell the IP to another company as well. And even in those cases, if you have performed the work, you would be able to claim this.
Thanks, Christian. I just thought it would be worth covering that now because I knew it was a bit more advanced. But
Perfect. So let's move to the next slide. So the next, sorry, I need to move to the next slide. Let me wait.
Dan's doing all of the magic behind the scenes except the slides.
Yes, yeah. So now this slide talks about what is R&D for tax purposes. So, I have got some more detailed slides which present an expanded picture of this eligibility criteria, but this is the core of the eligibility criteria as defined by the guidelines published by the government. There is a document which is titled Guidelines on the Meaning of R&D for Tax Purposes. That is about 15, 17 page document. It's actually quite a nice read. I would encourage you to go through that document when you can find some time. It's written in a reasonably good language. So there are two things that are important. But the overall scenario where you can claim R&D tax credit is if you have a project where you have technical challenges. So it's not easy to do, it's not straightforward to do. It's not just like implementing an existing system or technology. You have to spend a lot of time figuring out how to make the technology work. That is generally indicative that there would be R&D present in the project. Now, how you benchmark that level of technical difficulty or problem in your project is through a set of two criteria. So those are the first two bullet points on the slide. The first one is that you need to have an advance associated with your project. An advance is basically you look at the baseline in terms of technology. So you look at what is available in the industry, what is available within your organization, what kind of technologies are well understood, what kind of technologies you're reasonably comfortable that they work, and then you see how you are trying to make an effort to go beyond those technologies to the next level of technology. And if you are trying to do that, if you're trying to reach the next level of technology, then that represents an advance. Now, in practical situations, an advance could be where you are trying to create new technology. So you don't have a baseline technology at all. You're trying to create something which is new. In the world of software, it could be a new architecture, it could be a new algorithm, it could be a new integration design. In the world of pharmaceuticals, it could be a new drug formulation, it could be a new process for mixing drugs, it could be a new testing approach for how you test the efficacy of the drug. In the manufacturing sector, it could be how you improve the efficiency of a machine or how you reduce waste in that process. And in the e-commerce world, you'll have plenty of areas. So in the e-commerce world, you could have, maybe you're working on a specific type of software, you're trying to improve how your software integrates with another system, you're trying to scale up your operation, and the software doesn't allow you to do that easily, and therefore you have to spend time figuring out how to do it. You may be looking at a new packaging technology, you may be looking at a new product itself, the product that you're shipping. So the opportunities are quite there are a lot of opportunities wherever you are doing technology work, to see if it is actually taking technology to the next level. So one obvious scenario would be you are creating new technology. Another scenario would be you are improving existing technology, making it more efficient, reducing waste, improving the efficiency of the process, scaling it up. All of those things can also lead to advances. And then another area of advance is where you may be redesigning something using a completely different set of technologies. So for example, if you have a piece of equipment and you are changing the material behind that equipment, so say something has been traditionally built using steel, and then you're converting it to be built using plastic, but equally as strong as steel, and then reducing the weight in that process, and creating a different design for that altogether. That kind of work can also qualify as an advance. So that first point is quite important. You need to have an effort to achieve an advance in terms of technology. And then the second point associated to that is that you need to have an uncertainty at a technical level, technological level, in achieving that advance, which basically means that you should have a problem as you do the work. It should not be straightforward. It should not be something where you can find the solution on a website or in a book which tells you exactly how to do it. So again, going by some of those examples I talked about earlier, if you are a software business, then how you integrate two pieces of software could be a challenge. How you derive performance from that software could be a challenge. How you manage your computing resources from the software could be a challenge. If you're a life science business, then how you work out those drug formulations could be a challenge. And in the e-commerce world, you could have multiple challenges. For example, your packing material is not good enough, and then there's no obvious replacement for that, and you're trying out different technologies to see if anything else is suitable. You may be using proprietary software, third-party software that doesn't integrate with some of your systems, and that could lead to a challenge. So what I would encourage you to do is to think about the challenges you have had at a technical level, and see whether that led to an uncertainty. Sorry, Joe. Yes, please go ahead.
Yeah, sorry, I just wanted to quickly ask because I suppose a lot of our clients are e-commerce businesses and deal with physical products. I know we might be getting ahead with some of the questions for later, but they might be hearing this and being like, "Oh, the bar, scientific advances or change of materials." I suppose how often or how applicable do you think this is to a physical products business or someone making new products?
Yeah. So there are different angles to look at here, Joe. So from a physical product perspective, you could have a technological advance associated with the product itself. So say you have the product and you are changing the material within the product, or you're changing the design of the product. So suppose the product has a particular shape and you're changing the shape of the product. That could involve some kind of engineering work to achieve that change. You may have to do some analysis, some kind of modeling. You may have to run CAD models, etc., to change the product, and there would be engineering effort associated with that. Sometimes it could be changes which lead to the product becoming higher strength, or more resilient, or your product has a better shelf life. Instead of 1 year, you enhance the shelf life to 2 years, 3 years. So those sorts of core improvements in the product itself are very good areas to look at. You could also have associated improvements, not necessarily in the product itself, but in the way you produce the product. So, for example, your product is produced in a manufacturing unit, and currently your manufacturing unit has a capacity to produce 500 units per day. But if you change that, change that setup to produce 1,000 units per day because you have got additional demand, and that's not a straightforward, simple thing to do, then you could have an advance associated with that. Also, with the product, if you are changing something in the process which reduces wastage. So suppose you're building the product using some material, but inevitably some material will go to waste in that process. So if you're designing some technical solution which reduces the wastage in that process, then you can have an advance associated with the process of producing the product, not necessarily the product itself. So there are opportunities for product businesses to look at these angles, how you build your testing systems, for example. And you don't have to think about my product is X and I need to make it 10 times better to be able to claim the R&D benefit. There are opportunities in smaller areas around that as well.
So, is a lot of it really in how you present your project to HMRC rather than necessarily what you do? I mean, it might still be an advance, but it's almost how you sell that it is an advance, or how that you sell it is R&D.
Yeah, I mean, obviously, I won't call it selling, but you need to justify the technical strength of the project. That is what it is. So you need to be able to articulate very clearly where the technical problems are. If you're going from 500 units to 1,000 units per day, and you don't have the luxury of buying new machines, and you're making some improvements in your existing machines, which cannot be done easily, then you need to be able to present that case, saying, here is why this was difficult technically to do it. So the justification is quite important. You need to have the right technical characteristics. And for that, what we do is we write a report which outlines what the technical challenges were, what the improvements are. That is what works with HMRC. Obviously, it's not a typical sales pitch saying we have got 20 new features, and HMRC are less interested in that. They're interested in the technology behind it.
Yes, thanks for that, Christian. I mean, articulate is definitely a much better word to capture that than sell. Um,
Yeah.
Patrick's asked another question around manufacturing in the UK. Now, I know that your next couple of slides do cover that, so we should hopefully come back to that when you get to those slides. And then,
Yeah.
so I'll let you carry on there. Sorry, Patrick, we'll pick that up in a moment.
Yeah, sure. So let's go back to the slide. So now, I talked about I talked about the qualification criteria, which are the first two bullet points, and then the when you can claim this. So you can claim the R&D tax benefit as part of your tax return. So there is a process which looks at your project and works out how much your qualifying spend is, how much money you're spending, which should get the 15% benefit, and that amount goes into your tax return. You have 2 years from the end of your financial year to claim the benefit. So suppose your financial year end is December, then for the year that finished in December 2024, you would be able to claim until December 2026. However, there is a new requirement where if you have not claimed previously for R&D tax credit, then you need to make an advance notification within 6 months of the financial year end, saying we are going to make a claim. You don't have to actually make the claim during that period, but just simply complete a form online on HMRC's portal saying we intend to make a claim, and then you have another 18 months to make the claim. So I would encourage all of you to look at your year end and make sure, if you haven't claimed before, make sure that your claim notification form is submitted within 6 months of the financial year end, and then the detailed work to complete the claim can happen later. This is a new requirement that was introduced about 12 months ago. and it's quite important not to miss the opportunity. So please do please do look at this if you regardless of whether you have a claim to make or not, please do look at this. And if there is a claim potentially available, then I would encourage you to file this. We can help with that. It's a pretty straightforward process. Okay, so I'll move to the next slide. Um, Now, I have kind of covered this already. So this is the slide that gives some details about how much benefit is available. Now, previously there were different types of benefits available. There was a distinction between small company and large company. Now, all of that has changed recently. So from 1st of April 2024 onwards, there is a scheme that applies universally to all the companies, regardless of size. So whether you are a small company or a large company, you have the same scheme, which gives you 15% after tax benefit. And there is one specific variation of the scheme, which says if you are a small company and loss making, and you have intensive R&D, meaning your 30% of your work is R&D in nature, then you get an enhanced return of 27% of the qualifying expenditure. So this is particularly helpful to startups because startups will not have a huge amount of capital. They will be pre-revenue, so they would be typically in a loss situation, and they would be in that phase where they are spending a lot of money on R&D, and the government wants to give a better reward to the startups in that space. So again, some of you who may have new companies, we could look at whether this applies to you. Otherwise, you would fall into the 15% category.
And just to make sure it makes sense, right? So 27% is a bigger number than 15%. Does that actually mean that the loss-making companies get a bigger benefit than profit-making companies with R&D?
Yes, so bigger benefit, and because they are supported more in that phase of the journey where they are putting more resources into R&D. So by default, if two companies are carrying out the same work and one company has a profit, one company has a loss, then they are treated equally. Both will get 15%. But if one of them is spending more than 30% of its total expenditure on R&D, which means they're really trying to push it forward, that is the company that gets supported more through the scheme. So this 30% is quite important. If two companies have both have 20% of their spend on R&D, then the second company will not get the 27% return. Okay, so let's move to the next slide then. So here is a very simple example just to help you picture what this how the mechanics work. So let's focus just on the first column here. So suppose your project total cost is £1 million. So you have a project where you're spending £1 million on the staff salaries, contractor payments, and software licenses, etc. I'll go through the list of things that you can include, but assume £1 million is the total amount spent. And we go through a process where we look at the project and we determine how much of the project is eligible. So that process, let's say, determines that 50% of your project is eligible. Then your qualifying amount would be 50% of that 1 million, which is 500,000. Now, on that 500,000, you get a 20% credit from the government. That credit works out to 100,000, but the credit itself is taxable. The government retains the credit from that 100,000. So they'll retain 25,000 from the credit of 100,000, which gives you 75,000 net amount. This 75,000 net amount is, as I mentioned, that is taken off your tax bill, or if you're not profitable, you get that money paid by the government. So this 75,000 is effectively 15% of the 500K that was determined to be qualifying in nature. That's how the whole scheme works. So very simple example here. We can provide some more details around this offline as well. And then if you happen to be in the enhanced scheme where you are spending more than 30% of your resources on R&D, then everything works out the same up to this point. So you determine your R&D eligible spend, and then you have a slightly different calculation, which leads to the 27% benefit here in that case. And this is paid as cash back to the company. So it's a very simple example to help you picture how the benefit works, and there are nuances to it. There's a process to go around it. You need to justify this as well in terms of documentation submitted to HMRC. So all of that requires a reasonable amount of work to prepare and submit the claim.
Thanks, Krishnan. I think it's worth noting that this is also on top of the actual tax relief you get on the expenditure anyway. So that £1 million will already come off of your trading profits, or it should do, depending on the type of expenditure. So this 75,000 or 135,000 is on top of the sort of the deductions you would have already got.
Yeah, absolutely. So let's move to the next slide, and I'll just spend a minute on this one. So these are the types of things that you can include in your R&D eligible cost. So it's restricted to these categories only. You cannot include anything else. So the staff cost, if you employ people to do the work, the technology project work, you can include the staff cost associated with them. That allows you to include base salaries, pension, national insurance, any cash bonuses, etc., that you pay. But it doesn't allow you to include any benefits in kind. So if you pay for a gym membership for someone or pay for health insurance, those things are not eligible. You can claim for what is called externally provided workers or contractors. So these are people who are not on your payroll but work, as contractors for you as part of your team. You can include their cost, but that's restricted to 65% of their cost only. So for staff, you can include 100% of their cost, but for contractors, you can only include 65% of the cost. That's mainly because they assume that there is a markup. If you had an equivalent staff member, you would have paid them 35% less. That's the rationale behind it. And as a small company, you can claim for the subcontractors also. So if you get outsource a piece of work to a third party, you can claim for the outsourced work. So for example, if you are engaging a testing agency to carry out some tests on your behalf, and they may not be doing it on site with you, you just give them a specification and they report back the results. You can include, again, this is also restricted to 65% of the cost that you pay. You can include the cost of software licenses that you buy, and that also allows you to include some cloud hosting cost for the purpose of R&D. If you're incurring hosting costs for your production purposes, that is not allowed. But anything you use in your technology development project, you can include that as well. And then general consumables, so your utilities, water, heat, light, power, etc. You pay for those, or any material that gets used in the process, that can be claimed. And finally, if you are paying a university or an independent organization to do some research on your behalf, a charitable organization, so then that can be also included as part of your claim. So bulk of it really tends to be in the staff and the contractors that you have. Rest of them tend to be generally smaller in nature. One question I get asked very frequently is, can you claim for rent? And the answer is no, you cannot claim for rent. But you can claim for any equipment that you buy that is required for R&D purposes. You can claim for, there is a slightly different scheme for that. I won't go into too much detail on that, but there is possibility to claim for some of the equipment through a different mechanism.
And just a quick question on this, Krishnan. Staff costs, does that include directors' costs? So let's say Patrick is a director of the company and he's developing his own products. Can he include his own expenses? And then a follow-up to that is, what if you haven't been putting payroll through for your business? Can you backdate it to correct that?
Yeah, so for directors of the business, you can include only their costs that go through the PAYE system. So anything that gets paid out as a dividend, you cannot include that. That's so any the fundamental principle, Joe, is that any cost that you include should have gone through your P&L. So if it's a P&L cost, you include that in your profit and loss account, then you can claim for it. Anything that goes outside of that process, you cannot include. So dividends cannot be included. And yes, you can backdate some of the cost, but eventually you have to bring it into the P&L of the company. The moment you bring it into the P&L of the company, you have to include it as a PAY cost or as a contractor cost, and then put it through the rules of the system.
The reason I ask that is because most e-commerce business owners will have, their one-man or two-person bands. They might be doing some R&D work and not realize it, and then not have a paid PAYE scheme set up. So if they sort of maybe from this webinar realize, I can potentially claim R&D, are they at a disadvantage? Are they able to correct that? That's sort of.
Yeah, so that requires a bit of, just a bit of comparison. So if you are a director who is paying yourself a salary of, say, 12,500 pounds or whatever the limit is, until that point, you have an advantage because you're not paying tax and you get 15% of it back. Above that amount, you need to run a little calculation on how much you're paying in tax versus how much you're recovering, and how, so I can give an illustration of that. And definitely, if you're employing other people or if you're bringing in contractors, then definitely those are worth including in the claim.
Thank you. Sorry, I didn't mean to interrupt the slides. I know we're near the end of them, and we might finally get to
Yeah.
answer Patrick's UK manufacturing question.
Yeah, so that brings us nicely into the question about where these costs should be. Previously, the scheme was very generous, so these costs could have been anywhere in the world. You could have employed a people outside of UK, you could have employed a person in China or India or South Africa or any other place, basically. But since 2024, the government has introduced a restriction saying all these costs should be in the UK unless it's physically impossible to have that cost in the UK. So for that reason, most of the stuff, most of the costs which are incurred outside of the UK will not be eligible. In exceptional circumstances, you could have a cost outside the UK eligible. So, for example, I'll give an extreme example. If your business is doing some research on how glaciers are formed at the North Pole, the only way you can do that research is by actually going to the North Pole and doing that work, or employing some agency to do that work. So if you can demonstrate that physically it's not possible to do the work in the UK, then yes, you can include the overseas cost. But in most cases, just having a scenario where you don't have a manufacturing plant in the UK will not be sufficient to argue that the work cannot be done in the UK. So they want to bring the costs back in the UK, and for that reason, overseas costs are not allowed. Um, Patrick, in your case, if there is something completely exceptional, which means that you cannot physically manufacture in the UK and there's no way you can replicate that setup in the UK, then potentially, yes, you can include, but I would say 99% of the time you would not be able to include any overseas spend.
What about the argument of it being sort of infeasible? So what if you said, well, there's a manufacturer in China and there's a manufacturer in the UK, but in China it's 1/10 of the cost. Effectively, UK government, I'm saving you money here. Do they consider that?
No, unfortunately, the cost is not considered by the government. So they have made it very clear in the guidance that just the cost alone is not justification enough for you not to have the manufacturing in the UK. I know it's not something which is a popular measure for most people, because why would you manufacture in the UK if the cost is 10 times higher? But unfortunately, the scheme has been designed in that way. But if there is an argument where you can say that doesn't matter what cost we pay in the UK, it simply cannot be done in the UK. So, for example, for a life science company, if they need to run clinical trials for how a drug is effective for people of a certain region, then the only way they can do that is physically run that trial in that region. So that is possible to argue that you cannot do that in the UK and include that cost. But unfortunately, for manufacturing software, etc., that argument doesn't hold.
And just a quick mention to anyone who's just joined us, if you've got any questions, please feel free to put them out there. We are about to get across to the live Q&A. Feel free to say hello so that we know you're there. Yeah, and share any questions in the comments. That'd be great.
Yeah. So just one closing point. I've covered all the main points here. There are some more details in the slides. The slides you can see. I'll just quickly, put the slides on screen for a second each. These are details of what I have covered in the previous slide anyway. So just go into more practical examples and what is an advance. I've talked through all of these, but just for reference, I'll put these on the screen so that you can look at them offline, and there are some examples here as well. So yeah, that's it. I'm happy to take further questions and talk to anything specific that you want me to.
Thanks, Christian. Thanks so much. I have a question, and there are also some questions that we had sort of submitted in advance. Although, interestingly, James has actually just thrown one out there. So let's, I suppose, go on James's, which is what evidence needs to be retained for these submissions? Thanks, James.
Yeah, so the evidence requirement from HMRC is that you need to be able to justify the cost. So we need to be able to present what costs have been included and how you have arrived at the eligibility percentage. If you have a timesheet system or if you have some kind of a project tracking system which records the expenses, then we need to make use of that. There is no, as per the guidance, there is no requirement for you to maintain a specific system, so it doesn't make it mandatory for you to have necessarily have a particular type of system. But if you have any form of project tracking, any form of timesheet, any form of management reports, those can be used for the process. And to justify the R&D claim, we need to prepare a project description in a specified format. So that's called the AIF form. So it's information form for the project itself. And that document basically outlines what is the baseline technology for your project, what is the advance, what is the uncertainty. So again, if we do the work, we help you, we write the document for you based on the discussions. So these are the two things, and then a general report outlining the methodology that has been followed. And that gets submitted to HMRC through a portal. And then obviously the number gets submitted through your tax return. So the most important thing is project description, how you have arrived at the cost, some narrative around that, and that goes into a report which gets submitted to HMRC.
Thanks for the question, James. And so the question that was submitted in advance, I'm going to sort of paraphrase it, but it was essentially around Kickstarter. And so we've got a number of clients that sell and launch products on Kickstarter. And they've essentially said, like, what about Kickstarter? How does that work? So I think what they mean is if they're launching a brand new product, say they're in the process of inventing something new, but on Kickstarter, they've been given a bunch of money in advance to actually develop that product. Does that count? I mean, have you got any experience with people that have launched products or clients that have launched products on Kickstarter?
Yeah, so previously there was no issue about receiving money from a client for building something. If they, if someone is paying for the work, so someone is asking you to build a product for them, and you build the product and just pass on the product to them, and you're effectively taking some work on a contract, then the new rules place some restrictions on that, or whether you can claim or not. Old rules did not place a heavy restriction on that. If someone is investing in your business, so if someone is saying, look, this is the so sometimes on Kickstarter you may get people who will just put in money into the business. They are not consumers of your product, so they're not expecting you to ship a product to them. They are basically participating in the success of the business. That is perfectly fine. You could also have customers saying, I would be interested in buying a car which has green color doors, and they are not asking you to build a car exclusively for them. They're just asking that, okay, if you have a green colored car, then I'll buy that. So you can sell the car to other people also. So if you're building a product which can be sold to multiple parties, then you're fine. You can claim R&D for it because it's your product. It's technology that you are building that can be reused. So we have to look at the situation where, are you building up something which will just go to one customer? If that is the case, then there are some restrictions. Are you building a product which can go to 10 customers? You just happen to have a wish list from them, or a customer has asked for some specifications which they're happy to buy, but you can sell it to other people, then yeah, you can claim for that as well. So we need to just look at the case by case basis of that stuff.
Thanks, Christian. And again, if anyone's got any other questions, especially around particular products that you're developing at the moment, now's the time to put them out there because Christian will be able to just give you his sort of off the cuff thoughts and opinions on it. You've obviously worked with hundreds and hundreds of businesses. How are there any examples of, I suppose, products that you've seen that haven't been successful in terms of claims, or that you say to someone, look, this just won't qualify? Um, can you give examples of those?
Yeah, very much so. And R&D, there is the eligibility criteria are there. Projects do not meet the eligibility criteria as well. So by no means am I saying that everything will qualify, because that is not the case. So examples of projects which don't qualify is if you have made a cosmetic change to your product. So you shipped your product in blue color and the clients like green color more, and you change the color to green, and suddenly you start selling 3 times the volume. But that's not a technical change. It may be a very popular change, it may be a very good thing for the business, but that's not a technical change, assuming that change of color can happen. So similarly, any kind of cosmetic change which doesn't require engineering effort, which doesn't require technical work to be done, will not be eligible. Anything where you are again making some smaller tweaks to your system. So if you have a software, you're making some small changes to the software, you're presenting a report in a different way, that will not qualify. Any enhancements that can be done reasonably straightforward way will not qualify. So when we look at your projects, we consider whether the work had a technical challenge. That's the first condition. And if it doesn't meet that technical challenge, then you cannot claim for it.
Now, with the point on the colour though, what if the business did some research and realised that they needed to make a cosmetic change because it was better for the environment, or it allowed them to produce more rather than necessarily sell more? Could they take that approach, or?
Yes, so there is, if you change the color, and the color change is not just, scratch it and repaint it with green color. That would be the obvious thing to do. Anyone can do that. But if you have a particular color, and the whatever you use as the components for that color, let's say it doesn't stick to the material that you have before, and you have to build something different to make it stick or make it last long. So for any reason, if your green color doesn't last more than 3 months and you have to change the formulation in that color, you have to do some research around, then that becomes more than a cosmetic change. That becomes a technical change, where you are actually looking at the properties of the mixing and how it goes on the material, and there could be an R&D angle with respect to that. So not necessary that the end output is all that we need to go by. We need to see what was involved in doing that. But if it's a straightforward change, then that would not qualify.
I ask that because I know how business owners think, and I'm sure there are people out there that are going down that route. And
Yeah.
you've mentioned, I suppose, examples that haven't worked or might not qualify. What are there any physical, especially from the e-commerce angle, physical products that you've seen successfully claim research and development or R&D tax credits?
Yeah, lots of them actually. So the most common example is, if you're in manufacturing, then the most common example is you change the shape or size of whatever you are building, and that requires engineering effort. You change the material, that requires engineering effort. And as I mentioned, it's not just the improvement in the product, how you manufacture, how you run that process, how how you change the packing material, how you change the machinery that produces the equipment. All of those things, if you're looking at wastage, if you're looking at producibility, how many units you can produce in one day. um, a very simple example, this is not necessarily just e-commerce, but tinned food manufacturers. So one of the manufacturers, they changed the size of the tin from 250 grams to 200 grams. That's a pretty, you would think of that as a very simple thing to do. But the reality is, as soon as you do that, instead of producing 4 tins per minute, they had to produce 5 tins per minute. And that became a bottleneck in their process because they were trying to produce, thousands of these, hundreds of thousands of these tins. So they had to redo the entire manufacturing unit, redesign the entire manufacturing unit for that simple change. So it's very important to consider, if you are enhancing the product or if you are making a change, it's important to see what the technical angle to that change is, and that could lead to uncovering some R&D eligibility as well. So for e-commerce company, any software implementation, any changes to the product, any changes to how you produce the product, all of those things merit looking at R&D claims.
And with the software, I'm guessing this might relate to, say, like if they're using AWS or Azure or sort of data centers. If those aren't based in the UK, so you mentioned that non-UK, you can't claim costs there. Let's say AWS is based in the US, would is that not claimable? Like, do you need to sort of research where the data's being processed?
No, so the data processing might happen in the US, but normally your payment would go to AWS in the UK. So normally, you would, and software licenses, there are not really those restrictions on software licenses. You could procure a software from outside the country as well. It's more around the staff or contractor costs that has been disallowed. So AWS cost, normally your AWS bill would come from the AWS UK entity or Ireland or somewhere like that. So that's fine.
Okay, cool. Thanks for clarifying.
And on the software side, you may have software for other things. So you may have some software for stock control. You may have some software for billing. You may have some software for warehouse management. I know some of these may not be necessarily required by all the companies in this forum, but if you are storing something, if you are keeping track of where the material is flowing and you are spending something to customize your software that does that, then definitely it's worth looking at R&D for that.
And so Patrick's asked another good question. So what about if you're using Upwork or Fiverr, which is a sort of subcontracting website, and I suppose your payment goes to Upwork and then they pay it, and I don't know whether or not they have a UK entity, but say they do, is that allowable?
Yeah, so previously, you would have been able to claim that regardless of where the person was. Now, under the new rules, if the person is not in the UK, you cannot claim for that, because the practical aspect of this is now HMRC want you to fill in the PAYE reference number of the contractor who has done the work. So if the contractor is not physically based in the UK, then you'll not have a PAYE reference for that. So yeah, so this normally it would not be eligible now.
Thanks, Patrick. And I suppose to the practicalities of it, how long does an R&D claim typically take? How long does the process take from someone putting the claim in and actually receiving tax back?
Yeah, so normally our claim process is, once we start doing the work, it takes about, we will request some data and information. So we'll request, timesheet information, payroll records, project management records, contractor records, etc. From the point where we get those details, it's about a 6 to 8 week process for us to turn around the claim and submit it, assuming you can submit the tax return at the same time. So 2 months from that point to submit the claim, and then in most cases HMRC would pay within 6 to 8 weeks. Um, so overall, from start to finish, about 4 or 5 months on an average. It can be accelerated. So if you're more engaged in the process, then we can do it quicker. So the quickest it would practically take is 3 4 months, and normally 4 to 6 months is a good estimate of timeline.
Thank you. And so I'm conscious we're in the last sort of 5 minutes. So again, if anyone's got any final questions, please throw them out there. But Christian, I suppose if anybody is watching this or listening to this in the future and they think they can make an R&D claim or they're not sure, are you able to help? Are you able to give a quick summary of your services and what people can do?
Yeah, absolutely. And we love to talk to people who are working on anything and understand what you're working on and guide. So you can find a lot of material on our website, which is researchqx.com. So researchqx.com, and you'll find my profile and details there as well. There is a generic email ID, info@researchqx.com or hello@researchqx.com. So feel free to drop us a message there. I am on LinkedIn, so you can find me on LinkedIn and feel free to connect on LinkedIn and send me a message there as well. And even if you don't think you can make an R&D claim, we can have a chat and at least make you aware of the rules, so that whenever a new project comes in, you can evaluate that. The model in which we work is we don't charge any fees for initial consultation, and in most cases, we can link our fees to the success of the claim. So you don't have to pay anything to us until you get the money back from HMRC. We can look at other ways of supporting you as well. And in general, it's just good to connect with people. So regardless of whether we do the work for you or not, I'm always happy to share my insights and advice and latest practice. We can do that as well.
And do you give a sort of free consultation when if people have questions or?
Absolutely. Yeah, absolutely. So, I'll happily make you aware of the R&D tax credit scheme. I can run through the overall grant system, patent box, etc. So, we can do it in a forum like this, or I'm happy to do it one-to-one individually with people as well.
Amazing, thank you. And there was one final question from James. So he's asked if we develop a new product that necessitates a form of new packaging due to it melting and degrading, but they're working with Chinese manufacturers, would that qualify?
Uh, I think the likely probability of disqualifying is good, because if you're looking at a new form of packaging and you have a technical challenge in making it work, given what you have said, due to it melting, degrading all the existing packaging solutions, then that means you're looking at a new technical solution for how your packaging is built. And if you have any technical difficulties in having that material for packaging, making it work, having the right strength, having the right temperature characteristics, then it looks like that could qualify. Obviously, we'll have to go through more details. So yeah, I would definitely encourage you to go through a more detailed evaluation of that project. I'm happy to discuss that offline as well.
Amazing. Well, thank you so much, Krishnan, for all of your knowledge, and we'll make sure that we put all of the links to your website so that people can find you if they've got any other questions. Ben, Reza, Patrick, James, thanks for all of the questions as we've been going. Really appreciate it. Yeah, so any closing remarks, Krishnan?
No, Joe, thank you very much for kindly inviting me to do this webinar. Really enjoyed it, and keep the questions coming. And I look forward to interacting with some people. And it's not necessarily about having a chargeable engagement. As I said, I'm very passionate about working with small business owners. I like to see the smile on their face when they receive some money from the government. So and generally learn more about the interesting things that you do. So yeah, I'd be quite happy to have a chat with anyone who wants to reach out to me. Thank you.
Amazing. Thanks so much. Thanks, everyone. See you all soon.
All right. Thank you. Bye.